Well, good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up, and this wrap-up is for the evening of Wednesday, and we're at the 6th of September, 2023. So here I am, 6:10. I'm looking outside. The sun is going down by a lot. It's getting very close to being dark in Chicago. That's hard to believe. It's 6:10. Where'd summer go? I remember as a kid, the summer went forever. As an adult, it seems that it was here 30 days and then it's gone. It's amazing to me. And you'll see that as life goes on. It's just one of those things, and you'll end up saying it yourself. Here's something that's not. Where are we in these markets? I question what's going on. I was looking at CNBC and a lot of analysts that I like on that. All of a sudden, they're talking Disney, and you're going to regret not buying it. The charts are down, and one of the analysts said, "But the chart action's bearish," and the other analyst goes, "Doesn't matter." Well, that isn't true. You're either a chartist or you're not a chartist, or you're a chartist when it suits, and if the trade goes against you, it's an investment. How many times have you done that to yourself? I'll raise my hand. It starts with me. I stopped doing that a very long time ago. I either want to buy something as an investment, and then why should I look at the chart? Just buy it, put it away, and forget about it. If I'm going to be a chartist and I want to trade something, then I'm going to do just what I say here. And if I don't do that, shame on me. So you have to be a Jekyll, hi, how are you? And the Hyde, how are you? I'm the investor. Which one of those two faces do you want to be? Look in the mirror and make your decisions. If you're somebody that thinks you're a trader and all the trades that go against you, you're going to hold on to because you're now suddenly they're a good investment, you're probably a loser. If you're an investor that you're buying it for the long term, define your long term and at what point isn't working out for you. That's the ways that you do it. I want to keep pointing out, September's notorious for ripping heads off to the downside in these markets. Does it have to be? No. Seasonality, past events, they have a place. You should be aware of them. But if it were that easy, there'd be billionaires. There wouldn't be anybody with a cup on the street. Hey, the market's going to go down. I'll go borrow some money from my friend. I'm going to be able to buy puts and I'll make money on it. It's going to do this. If it were only that easy, right? It never is. But there's lots of problems. There's lots. Interest rates keep going higher, not because of the Fed. Stop with that nonsense already. It's going higher because of the Treasury. Do you have any idea every day how much they're auctioning off? And are you watching the auction results? They keep going higher. It doesn't matter if they're a 1 year. Today we're 17 weeks, and I'm watching 5.3%. 5.4% for 17 weeks. They're going to pay people. And do you know why it's going up that much? Because in order to get the $1 trillion that the U.S. needs, because we're spending so much under this administration, you heard what I said, under this administration, that we have to drive interest rates higher. We're doing the Fed's job for it. The Fed really can hold. A quarter-point hike isn't going to drive it higher than the Treasury's driving it higher. And I know you can write me and tell me I don't know what I'm talking about. Nonsense. I know exactly what I'm talking about. Look at the results every day. Look at how much is being auctioned off. We're not talking, it's millions. We're talking trillions, not trillions, billions to get to the trillion mark. Billions. And it's just every day. Is it 100 billion? Is it 125 billion? Okay, it takes a lot of billions to get to a trillion, but that's what we're doing. So the Treasury, is behind it. Then I was listening as people saying, well, corporations are doing that. Corporations aren't. If they didn't take advantage of zero interest rates a while back, why do you think they're going now? Then for the fools out there that think that AMC, okay, I have warned you. I have been adamant that this company, they're going to take all the stock, do their 10-for-1 split. They're going to announce a big offering. And if you don't think that's dilution and you own it, shame on you, all right? The stock's the equivalent of 80 cents on the dollar prior to the 10-for-1 split. So it's $8 and a fraction, all right? And they want to dilute you further, and you want to own that. I wish you the best. All right, how are they going to service all this debt? They can't issue debt. They got to do it in common stock. So they're begging John and Mary and all of you to come on in and buy AMC because of the value that it has. It may if it can survive. There is a place for movie theaters. Is it them? That's the big question. Let me see if I can get over here. I'm on the wrong chart, but I want to get to the right one. I just think I was one off. There I am. Okay. That, by the way, that you saw, it doesn't bother me. You saw that. This is how in the morning, and we should do this. In the morning, these are what my charts look like. They're black. They have way more lines on them, more moving averages. I explain it every morning. We go through 40 charts. They look just this way all the way through them, and away we go. For this video, I do them in a lighter color with not as much on it. Now, yesterday, I had part of what I was trying to do right, and I appreciate you writing me, and I was wrong. I was looking at two symbols yesterday, DRI for Darden Gardens, and DAR. And on some of the charts, I put DRI, and all you had to do is look on the top left, and you caught that, and others it came up DAR. Dumb. In any case, I am bearish. Why? Because I think the consumer's going to pull in a big way. I think they're going to cut their dining out as much as they did for the summertime. I don't think they'll be going out there 2-3 nights a week. I think it'll be a once-a-week event for them. And I think the restaurants get hurt. Darden's got all kinds of restaurants. It's got from the Capitol Grill, the Longhorn Steak, the Olive Garden, you all know, and many other brands in there. It's a hell of an operation. But it's in a free fall right now. The market has just gone from 150, 750. It is down $10. But more important, that's just now. It's just come from roughly 172, and it is all the way down to 148. And I still think there's pressure on the market. And things can get a lot worse if this 18-day average gets under the 200. Take time to do that, but not as much time as you think. We could be there in a week or so. I think you're getting a little overdone. You're under the Bollinger Band, and whenever you get under that band and stay there, market seems to want to give you a pop. I'll count on that. I can see the resistance back up at the 200-day average at 150, 350, and you have an embedded reading. So this is a bearish market. I don't think traders are willingly, if they follow what I teach, will want to be short under a Bollinger Band, but on a good rally, I think they're going to hit this market. In Rivian, you're overbought into the upper band. This is where pros take money off the table, in my opinion. Doesn't mean I'm right. That's what I believe. Done this I've been a broker since '69. I know I've been teaching charting, just so you'll know, since the early 70s. I used to do it for a subsidiary many, many years ago, affiliated with some of the different colleges in Chicago, and I travel around in the city and teach courses to people that wanted to learn. Remember, there was no internet. It was all very different. We actually had chalkboards, and we would talk, and I'd hand things out because you didn't have anything but a projector. And I remember we had the projectors like in school, and you'd put it up on the screen, and I'd do all those different things. This is so much more fun right now. And you can see you're in that resistance zone, but it's acting way better than a lot of other car companies. In UGA, the gasoline fund, here's what is going on, and please understand why I'm still bearish, and so bearish. OPEC plus Russia is determined to take your money. They have colluded to take oil off the market into December. They want prices to stay between, let's call it $80 and $100. They prefer it in the $90 to $100 range, and that's a tax on you. I woke up this morning listening to all of a sudden a warning alerts from American Airlines, Alaska, I think it was Southwest, talking about fuel costs, because fuel costs have soared in the past 30 days. Why? Attributable to what OPEC is doing. And as that's happening to them, their margins are getting squeezed. Now, how tired are you of paying these crazy prices to fly a plane? I know I'm fed up with it. I wanted to go see my son. I'm not a poor man, but I said, you know, this is crazy what they want. Let the price come down. Drop the price and I'll get interested again, and I will see them. But I'm not doing that. I went to Boca. I spent $1,000 round trip on coach fare. That's craziness. way overpriced. But now those seats are going to get empty because I predict the American public will pull back. That doesn't mean the airplanes companies won't pull some planes out and you'll have fewer seats. They've got to figure out a way, and they do. And the whole game there is how to hurt you to put money in their pocket. Higher high, lower low. You can see how the market's sitting between the 18 and the 100-day average, but not a trend in the financial services. Sort of sitting here saying, what do I do? How do I get into a trend? You have market upon markets that aren't in trends right now. That August rally, that vertical move that we had to cut the losses, and now being met by this, has hurt many of these charts. Example, you had an uptrend in the industrial sector, and I kept saying, I don't know why industry's moving. I'm not seeing things that good. And with today's break, you got through that low. So now what you've done is you've gone back to a neutral chart. That's what I'm getting at. I see what's going on. Disney, I'm watching CNBC, and they're going, you got to own Disney. I don't know. My work is saying you got to sell Disney. Just the opposite until this red line closes over 21. Then I don't want to be short. But until then, rallies in the market look to me as though, and they have been, you've had an embedded reading. And since you embedded each of these rallies, if you sold them, you have been rewarded. This company has problems, big problems. Does it pay for what they're doing with charter on that battleground? I'm not convinced. What about their movies? They have nothing going right now. So it's the worst of times for a great American company. This is no longer a company that's 105. This is a company that's now 80, and that's why the analysts are saying they want you to buy it. It's going to return to its grandeur. Is it? Just got to ask that. I don't know that their cost of making movies when this actor strike and their screenwriters, what does that leave for the studios? I don't know. Got to be careful. That's why Netflix, they all hate it, but they don't deal like that. RSPD, something brand new. I removed Boeing. I told you I was going to. You have a lower low, a higher high, pulling back here. And this is going to watch the consumer discretionary ETF. I like this. I like the equal weight. It smooths things out. Are we trending? No. Again, that was that rally at the end of August. Now let's see if one sets itself up. In the home builders, again, home builders I don't want to be overly bearish on. People are going to buy, they can afford to buy because they want a home. Whether it's a 7.5% mortgage, a 7, a 6, they're going to do it, all right? And a home builder's a new home. It's not an existing home that are very difficult to sell. There are ways they work with it. They can front load so you get a 5% mortgage, not a 7. It's all in the pricing. It's all in what they've got. Labor costs, if they can get them under control. Lumber costs. I can go on with goods that have come down. There's some profit and prices have gone up. You know what home prices have done. Rent prices are through the roof. There's a built-in market. The Fed has to be looking at rents. They're not falling. You can give me a city where they're falling, but if you look at the national indices, they're not falling. And that's because there's no competition and nobody's putting up these new buildings for it. Less property, no new homes, existing home sales, people are staying in them. They got 3-4% mortgages. They're petrified to go out and get a 7% one. Rent stays strong. These guys, they've got an interesting game. Energy sector. You think I want to fight OPEC Plus and Russia? No. But I wouldn't have you buy a Bollinger Band ever. In the gold market, this is a real important number coming up. If this market gets under 176.63, then it's taken all its rally power, it's over, and you open the door up to come back to the lower Bollinger Band. But more important, you take the market out of the remaining uptrend that it has. This is the battleground. Right here, you're on it. 177.65 to 66. The combination of the 200-day and the 18-day average. In silver, still bearish. Looking for it down. Once it lost the bullish embedded reading, I was looking for the 18-day average. Got it. This is the gravy. Is it enough to get down to 2015? I don't know. It's an awful big break from here, another dollar. It doesn't sound like it, but it's a lot. 35 cents, if you think about it, is 1.62%. So you want to take that down 4 times that amount, roughly. So that's 6% more. That's a lot. That's the way that I look at the pricing. Okay, could the math be off slightly? Yeah, but who cares? You're in the ballpark. In COPX, I'm looking at the market fighting the 200 to 100-day average, and now you made it lower and low. I don't buy into what China's done. I don't think that they're serious about reviving their property market. I think that Xi is frozen in his stance. I don't think he's got a handle on what's going on right now. And it's all up to him. This is not a free society. It's what he decides to do, and everybody falls in line. I don't think he's got it under control. In TLT, higher high, lower low, market pushing itself to the downside. Why? I'm going to repeat, U.S. Treasury. UUP, as long as interest rates are going higher and the U.S. economy stays as strong. Now, as strong is the key phrase, all right? We are seeing the signs that the labor is weakening. We are seeing signs that the service PMIs may have peaked out and ready to back off a little bit here. So there are changes. How long they'll persist? Will they grab a trend? That's what people are watching. But right now, we're the best game in the world. And that's what got the dollar up there. And in Europe, not one of the better games in the world. Will they go for another rate hike? I don't know. I'll tell you, are you watching Germany's economic numbers? I wrote about them today. I put out a bunch, factory orders and the like. This is a really monster slowdown. They're the economic engine. You want to keep throwing higher rates on that engine? I don't think so. So I'm just wondering if people aren't getting ready there to say, Uncle, we'll find a reason to say we're going to pause and see what the markets are doing, because if the engine is slowing down, inflation's probably slowing down to a degree too. You put it together, you come up with a game plan, and that's what I'm here for. This is but part of our free offers. This page goes down at least this size again. It's at iraepstein.com under free offers, and it's all kinds. It's some of the charting courses I create for free. It's chart patterns that you want to get. It's things for your desk. It's ideas that you can get. How do you put together this? How do you use the pivot points, the Arun indicators? All free. To get there, you can also click up here at any point. Now, I am looking to do over the weekend probably a special report or two, maybe one on stocks or ETFs, and maybe one on the futures. They're all going to come in. I am intending to do a webinar. That's going to happen very shortly. I'm picking a day for next week where I might get that going again. I'm Ira. You have a good day. I'll talk to you all in the morning. Take care.